the kind of thing that we are seeing in the markets is increased interest in the QIP that are at the table on offer. Other than that, the promoters have been selling stake. A lot of action in the primary market as well. So firstly, wanted to touch upon PB FinTech. That is one of the stocks that going to be in focus today. As per sources, the block deal will be there, wherein Jashish Daya are likely to sell around 5 million shares at a price of 1,800 rupees. If you can give us some sense that how do you see this particular deal to happen coming at this time, wherein recently such deals were not taken that positively by the markets, case in point being Dixon Tech.
Yeah, hi, good morning. Thanks for having me on the show. Yes, clearly, when the market sentiment is so good and when the indices are at all-time high, or somewhere there actually, obviously there is going to be a temptation on the part of the promoters and some of the private equity investors to kind of take out some profits off the table. And I don't see necessarily that as a bad thing. Only thing is that in the short run, if the fundraise quantum is on a larger size, it could put some pressure on the liquidity. But not a bad thing per se in the current scenario. Talking specifically about PB FinTech, I think the stock has gone through a large correction over the last, let's say, about 6-8 months or so. But as a concept, we do like platform companies. We do think that going ahead, something like a PB FinTech or some of the other platform companies are better placed in the current scenario. So, not a short-term view there, but from a 12 months or beyond, I definitely think that PB FinTech will be one stock that one could definitely have because of the niche offering that they have, insurance and other related products.
Right, Hemang, hi, morning. While we are talking about some stock-specific news and updates, we also understand from our sources that SBI is going to be in focus on the back of the 25,000 crore rupee QIP that they are planning to hold and execute. What is your view on that? Because SBI, since a very long time, has not raised fresh capital, and PSU banks yesterday were the top sectoral loser. Before that, they were the top sectoral gainer. So what are you making of the entire pack and this SBI's QIP?
So, as far as banks are concerned, I think the day the rate cut was announced, I think there has been a small correction across majority of the banks. And I do think that now that banks are seeing a bit of a rebound and most of the, kind of pressure that could have led to the, margin pressure that is now kind of low in the market. So, not looking at that negatively. But I think that private sector banks are relatively better placed. So something like HDFC Bank or Axis Bank, Federal Bank, they are relatively better placed. SBI, yes, the QIP size is too big. So it remains to be seen at what price point they are able to do this. But if it is at, let's 2, 3, 4% then for discount, that will be a do this. But if it is at, let's 2, 3, 4% then for discount, that will be a big positive trigger for the bank.
All right, so let's watch out for SBI in today's trading session as well. But the other sector that we wanted to touch upon is the cement pack, because channel checks suggest that cement prices and demand softened due to the early monsoons, and the All India average price dropped by around 1% on the monthly basis when it comes to the June month. Let's go across to my colleague Ashesha, who's standing by with more details on this one. Ashesha.
Cement sector will be in focus today, and that is because early onset of monsoon seems to be impacting both demand as well as pricing across regions. Motilal Oswal has done some channel checks for the cement sector, and they've come out with a report where they say that prices have declined in the month of June on a month-on-month basis by about 1%. In fact, early onset of monsoon, as I mentioned, is one of the reasons. But apart from that, shortage of labor and oversupply concerns in the industry also seem to be weighing on prices in the cement sector. Now, as far as the region-wise reduction in prices are concerned, average cement prices declined by ₹7 per bag, which translates to about 2% in the southern region. They declined by 1% in the eastern region, although prices have remained constant in north, central and western region. Now, despite the decline that we have seen on a month-on-month basis in the month of June, on a sequential basis, prices have still risen on account of the price hikes that the industry had taken in the month of April and May this year. So on a sequential basis, Q1 FY26 so far, prices have risen by about 5% QOQ. And this, as I mentioned, is on account of the price hikes that the industry had taken in April and May. Now, Motilal Oswal believes that as far as volume growth is concerned, that is expected to be low to mid single digits on a year-on-year basis in the first quarter of FY26, but on account of price hikes in April and May, coupled with cost-saving measures that the industry has been taking, profitability is likely to increase in the first quarter of FY26. So yes, prices have declined on account of early onset of monsoon in the month of June on a month-on-month basis, but despite that, remember, on a sequential basis, prices are still up by about 5%.
That's Motilal Oswal's take on the entire cement space. Hemang, yesterday on the show, we were having a very interesting conversation where Nikunj was pointing out how the cement space has underperformed what Nifty has done in the last 10 years. If you take a look at it from a broader perspective, do you believe that cement has what it takes to outperform the Nifty going ahead?
Cement is extremely well placed because of the underperformance that it had over the last 2-3 years. Most importantly, if you see at the industry level, there is a massive consolidation and there are two major players who have emerged. If you look at the numbers, I think operating profit per ton across majority of the companies is looking quite strong, and the fact that the crude price has actually come off, to whatever next they are at right now, surely will have some sort of a positive rubber. Only thing is that typically in the monsoon period, there is a little bit of low activity. So this quarter per se in terms of volume growth may not be great, but I think from a 6 to 12 months perspective, names like Ultratech, some of the southern cement companies, because remember in South India the overall demand supply situation is better and the pricing environment is much better. So something like Bajaj Cement, Franco Cement, Sagar Cement, these are the better ones compared to some of the north or northwest based companies.
All right, so stick to the north and the northwest-based companies. That's the advice coming in from Hemang. But other than that, today all eyes will be on some of these power-related companies as well, because good news coming in for the consumers in Maharashtra with respect to the power prices, because for the first time ever, the state has announced the power tariff price cuts to be implemented in a staggered manner over the next 5 years, where in the very first year we will see a 10% of the cut happening, and in the next 5 years a 26% of power tariff price cut is what the CM Devendra Fadnavis has announced. In terms of that, he is also highlighting that 70% of the consumers in Maharashtra actually use less than 100 units, and those will be the big beneficiaries. It will not just be the domestic consumption, the commercial and industrial consumers will also benefit from this particular move. And the other thing that he's been highlighting is the increased focus on the renewable energy in the PPAs, and that will actually drive the further cost savings and affordable tariffs in the times ahead. He's also highlighting that with respect to the negotiations that have taken in the past, there's always a chance or a call for higher tariffs in the times ahead, but this time it's just the opposite, wherein a 10% power tariff price cut that has been announced in the state of Maharashtra. Hemang, give us your sense that yes, of course, this news is very good from the consumer point of view, but what about the companies who supply powers? Will it have any meaningful impact on them? Because I believe that the PPAs get signed beforehand, but some of the future biddings can have some bit of a hit over there. But what is your understanding on the same? Hemang, I guess you have to unmute yourself.
Or a move on the part of the companies to sort of give away some sort of a benefit to consumer. At this point, it's absolutely, it came as a surprise for a lot of people. And I do think that that model really doesn't work, because if you look at the Maharashtra state, budget itself is going through a little bit of strain because of the kind of freebies and Ladki Behna and many other things that they have really come out with, and they had to take price increase in many other areas, particularly liquor, if you see. So not looking at this as a big positive. I think for power companies, we need to see in detail what is the component of supply that they give to the smaller consumers, where the government is trying to give them some relief. But definitely, I think that this is not positive news from either power generating companies' perspective, or the ones who are supplying consumers.
Okay, so that's the take on power. But Chandan, what are you making of some of these power stocks? Not necessarily Maharashtra focused, but overall from the power pack, what are you liking at the moment?
So, if you look at the power finance companies or the power name, actually, the range bound bias is clearly visible, or a couple of names have witnessed some profit booking from higher levels. So, I'll focus on the power finance name compared to the only power companies. So, PFC is on radar. It has been consolidating but taken multiple support near 390 zone. So with higher support of 400, we are expecting this counter to head towards 430 kind of level. In power company, let me focus on the counter like power grid. We believe that now the consolidation or corrective move is taking an end, and some recovery could be seen with support of 284. It can head towards 303 kind of level.
Okay, so some of these power stocks and power financiers that Chandan is liking at the moment. But another stock that's going to be in focus today is going to be Hindustan Unilever HUL, because the parent, that's Unilever PLC, the global parent, has entered into a share purchase agreement. Before we get into the details of the SPA, let's remind our viewers a little bit about the background that surrounds this entire ice cream business demerger. Remember, in March of 2024, Unilever PLC had announced that they want to demerge and they want to separate the ice cream business from the overall Unilever brand. In line with that strategy, HUL, which is the Indian branch of Unilever, also demerged its ice cream business, which is Quality Walls India Limited. So the update on this front is that now, post the demerger, after it is executed, Hindustan PLC, Unilever PLC is going to be holding 61.9% stake in Quality Walls India. When this SPA is executed, the SPA between Unilever PLC and the Netherlands parent, which is the holding company of their ice cream business, which is the Magnum Ice Cream Company. So once this share purchase agreement is executed, Unilever will be transferring its entire 61.9% stakeholding in Quality Walls to the Magnum Company. And post the demerger, Quality Walls will now stand to become a subsidiary of the Magnum Company instead of Unilever. The controlling power will also rest with the Magnum Company for the operations of Quality Walls. And in this process, Quality Walls India is not going to be issuing any new shares. So while this is happening at a holding level, at the global parent level, HUL is still going to be in focus on the back of this news flow. But Kunal, what are you making of a stock like HUL, which is an FMCG giant? It's a behemoth when it comes to the FMCG industry, but it's not done all that much. Compared to that, smaller names have been doing better. In this entire consumption basket, what are you liking?
Yeah, and I think you rightly pointed out that HUL has not been a great performer, especially in the last 6 months or so, because I remember a point where I think HUL fell by more than 20-25%, and for an FMCG stock to fall by 20-25% in a matter of, I think, 1 to 3 months, I think it tells that the texture for the those particular stocks, the large cap names, they change quite dramatically. And these stocks, they generally tend to have a tendency where these stocks, after this kind of a sharp correction, they remain into their lower end of the price bands for 3 to 6 months at least. So I think HUL is going through that kind of a phase of a time-wise, price-wise consolidation. Right now, I think the stock, which corrected from 2,600 to 2,150 mark, is just closer to the lower end of the price range at 2,270. I believe that the stock may drift a little bit more lower looking at the current charts, and especially in the last 1 week where the stock has corrected almost 100 points from 2250 levels to 2350 levels to now 2250 plus mark where it's trading right now. So I would probably look at the stock consolidating or drifting a little bit more on the lower side.
All right. So That's about HUL, but the other stock that is going to be in focus today is Texmaco Rail, as the company has won new orders worth 535 crores for execution of wagons over the next 5 years. And Chandan, off late we have seen all these railway-related counters buzzing, but what exactly are you looking at when it comes to Texmaco Rail? How is this stock technically placed?
So I think Texmaco has bottomed out recently with support of 50-day exponential moving average. However, the medium-term trend is mixed, but short-term trend is giving some surge in the price movement. If I look at the price behavior of last 5 weeks, sustained buying interest is visible near 154, 155 marks, and it has been making high rise high lows from last 3 trading sessions. So some more up move could be seen in the counter with support of 165. It can head towards 188 kind of levels.
I go back to that strength in US market. For me, it is fascinating. Can we look at S&P from November, please? We don't have it. Never mind. But from November, if we really chart how S&P has moved, Donald Trump comes back. America is great. Theme picks up. US markets move into some kind of a upward, blast up. Dollar strengthens, goes to 110, and then came the entire tariff fear. From March, the entire threat that tariffs would change the supply chain, it could lead to a probable recession, had a cascading impact, and then this fear really snowballed into a large domino effect, and we saw massive wealth creation, massive wealth destruction in that March end, right, Kunal? Yeah. March end, right? It was March end when we saw what could be called as record wealth destruction in the US markets.
Yeah, I think April is where they bottomed out. Yeah.
April is where they bottomed
7th
out.
April.
And then 9 out of 10 economists have a bearish view that, okay, this is a bad year for you, this is a bad patch for US. Dollar is losing its relevance. The immigration laws will have impact on productivity. Their fiscal deficit now, or their deficit now, is so large that it will be almost impossible for them to service their debt, and built America should make a comeback. But equity markets and currency market for the first time have this kind of a disparity. Rarely do you see currency also represents at the end of the day an economy, and equity market is a function of economy. Rarely I've seen this kind of at least maybe we want to look at the charts and then look at it, but I've not seen this kind of a disparity. You cannot have a situation where rupee weakens and US market and Indian markets, they keep on strengthening. Rupee will weaken. Why? Because there is a problem with the macro, there is a problem with the flow. So dollar is weakening. Why? Because there are valid concerns around US debt, valid concerns around what will happen to productivity, and the sugar rush because of AI will go away. That's a valid concern. Then why are markets coming back? Because there is an excitement that interest rates will come down and the P multiples will change. I was just thinking through it, kya ho raha hai? So either US markets have to stall or dollar has to strengthen. I would bet on the first one, that US markets have to come down. I think it's more like a sectoral rotation which is happening somewhere. Money is moving out of currency and moving back into equities. Or maybe it's a bond interplay which is at play. I don't know. It's only in hindsight we'll figure it out. But it's slightly complicated for me to understand that why these two trends are very different which are staring at us. Hemang Jani, you can choose to disagree with me. You can choose to agree with me. If you agree with me, let's take the conversation forward.
Interesting observation that you had, and I think the most important aspect that we really need to focus upon is that how the earnings picture is shaping up in US. This quarter, if you see S&P 500, the earnings growth was about 13%. Now, a $55 trillion market cap economy and such a big corporate sector is growing at 13%. Whereas India, all the noise and hype and so many things, the Nifty growth is barely about 4 to 5%. So my feel is that the genuine earnings growth is happening in US. Now with tariff and all that, that noise has slowed down quite a lot, and one doesn't really know exactly what will be the impact. But if you see a little bit of uptick in terms of the economy, in terms of job market, definitely people would bet heavily on the US market. So I don't think the US economy or US markets are showing any sort of weakness per se. And yes, dollar index part, there may be a little bit of flows here and there. This is how it moves. But overall, we are quite positive on US and India in terms of the mid cap and small cap stocks.
So, Hemang, where have you shopped off late and where have you taken some chips off the table?
Our take is that some of the mid cap, small cap companies, we will have to take a bottom up approach. So some of the companies in the capital goods space, something like Shakti Pump, we do like that. Cap goods, let's say recently listed, Siemens subsidiary, that is something that is looking very interesting because of the fact that it's a very large player in T&D space. Some of the pharma which have corrected quite a lot. Aurobindo has corrected quite a lot from top, and I don't think there is any material negative which is going to come from the tariff, and the business overall is looking quite decent to us. So I do think that it is time to sort of look out for some of the companies in the broader market. Of course, index has done pretty well, but still some of the mid-cap companies are holding at a 15-20% below the high that they made somewhere last year.
Okay. Kunal, we've officially stopped discussing pharma.
Yeah.
Like it's officially we've stopped. Okay. Yeah. Expiry date.
There's nothing happening on the pharma stocks, frankly. Sun Pharma, Lupin, Cipla, Dr. Reddy, Divi's Lab.
Nothing is happening in the market only, Kunal.
No, even there, I mean, there's some pocket of activity which is happening, but the pharma stocks.
How do you deal with this boredom as a trader? In the morning you get 30 days, okay, 100 point here, 100 point there. I'll keep looking at it. Kab break out hoga. How do you deal with this?
I keep calling my friends.
And Shairi. Now I realize that why you've taken her to Shairi. एक और
I need to think.
I'll break out नहीं होता कल सोचेंगे. Chandan, what's keeping you busy these days? I mean, this is a difficult time to trade because the spreads are just not there.
So I think most of analysts are doing the same, like how Kunal mentioned few saris. I also do the same. And again, the good part in derivatives that you can build some strategy where you can get some positive to range bound bias or theta decay can work. But on stock wise, I believe we need to focus on selective theme. Like of late, we have seen good momentum in capital market, selective auto counter. So in such kind of scenario, stock specific selective theme can be selected, but in index, we have to be very selective or need to play with the option strategy to get the theta decay.
Bank Nifty, just think about 6 months to bahut hai. 1 month is what you need to look at. Bank Nifty, Reliance, just been very, very range bound. I'm going to throw an interesting ingredient in the melting pot, and the word here is defense. And whether it is in Asia, whether it is in Middle East, whether it is in Europe, it is very evident that the narrative in and around war supremacy is gaining more and more center stage. NATO last evening has introduced, I think NATO is saying, has indicated that 5% of the total GDP now will be spent in defense. I don't have the number for India, but it is definitely not 5%. Because in India, what had happened was that we had cut down on defense spending. Why? Because we wanted to take care of a fiscal deficit. Then came Atmanirbhar Bharat, which has increased the defense. India is on here? There you see, think about it. There you go. Nothing, no? And India is the largest defense importer in the world. India is not like a small, but imagine if Germany and other countries, and Germany has already gone on record and said that we're going to be increasing our percentage of defense spend higher. So defense as a theme now has become more like a global theme, and typically when something which becomes a global theme, the P multiples will always remain elevated. Why? Because you know that this is not like a local opportunity, it is a global phenomenon. So among defense stocks may be expensive, but looking at how the lay of the land and global war diplomacy and supremacy is changing, I think that defense has a long way to go, Hemang.
Yeah, because I think the way the geopolitics has played out in the last, let's say, 1 year or so, there is going to be a massive budget that will be thrown at defense, be it Eurozone, US, of course, Middle East, India, China. So definitely this theme is going to be very big. And remember, Nikunj, that while we are all talking about increased budget and all that, the Indian defense budget and the size of the Indian companies is not even $2 or $3 billion. I was looking at the data, and some of the companies in Europe or US, in terms of their top line, is about 40, 50, $60 billion. Right? Theme is playing out very well both globally and in India. So I think there's a long way to go when it comes to the entire thing. And remember, like you said, now there is an increased thrust on the latest technology when it comes to drones, missile technology, anti-missile technology. So there are very few companies who have that kind of a product range to offer, where there is a large part of money which is going to be put out there. So I definitely think that maybe Bharat Electronics, HAL, some of the private names in the defense are extremely well placed.
That's Chandan's take on some of these defense counters. But let's get in some mid-cap bets in. Chandan, you go first. Where in the mid-cap end of the market are you seeing pockets of value?
Go with one counter, that is NH Narayana Hrudayalaya. The stock has been making high tops, high bottom, trading at lifetime high territory. In fact, on the last trading session, it rallied well. So with the support of 2000, looking for an upside target towards 2130 in NH.
Kunal, what about you? What's looking good from the mid-cap basket?
So I'll go with the